Stocks were down slightly on Friday to close out the worst year since 2008. The NASDAQ, shown on this 1 year chart, dropped 33% in 2022. We look at the S&P 500, SPX, you can see that it lost 19.4% and is in slightly better shape than the NASDAQ composite index. Now, if we look at the Russell, I'm going to look at the ETF, the Russell 2000. It was down 21.6%. Well, this year, going back to the Qs, was marked by aggressive interest rate hikes by the Federal Reserve designed to curb inflation. There were recession fears, and of course, the Russia-Ukraine war looks like it has no ends in sight, and there's rising concerns over COVID-19 cases in China. But if we look at the housing market, that's another concern. And let's see, XHB, I think is housing. Yeah, here's the Home Builders ETF, and you can see we're right at the 200-day moving average here, which is this red line. Because surging mortgage rates put pressure on the housing prices during the last half or the last quarter of 2022. And so it has really slowed down, and property values are down somewhere around 17% off their highs earlier this year. Now, of all the ETFs that we trade, we only have 5 that are in pretty good shape. Let's take a look at them. There's the energy select sector. You can see it's trading right around its 50-day, the blue line here, and then it's above its 200-day moving average. And of course, it's been in pretty good territory all year. It dropped below a couple times earlier in the year. If we look at XLV, we have a positive cross or a golden cross here where the 50 crossed above the 200-day, and it's sitting right above that, just kind of in trading in la land for right now. We don't have a position in that one. We really don't have any positions in any XLI, which is the industrial sector. It looks very similar to the healthcare sector. ITA is probably one of the strongest sectors. Yeah, it has to be the strongest because it made a new 52-week high back here, and we got stopped out on this move down, but we get back in this one at 113. So it's looking pretty good. And last but not least is silver. We made some good trades on silver, but we got stopped out on this pullback right here. So we would get back in that one at 22.50. Now, just to look at some of let's look at a leader in the past, which is the semiconductor index, SMH. You can see it only popped above its 200-day moving average. Well, it started out above it and then went back down below, popped above, again above, but definitely in a precarious looking situation. We look at the financial sector. It's holding up a little bit better. It's trading right at the 200-day. And again, we have a positive cross here. So if that turns out to be accurate, we should go higher on XLF. Let's look at XLK. That's technology sector, very similar to the semiconductors. And I always like to look at the transportation index. Transports aren't doing so well, as you can see. Okay. Well, let's look at how our model is done. And we certainly had a terrific year. We gained 153.4%. Gains from shorting was 406,000. That's over 70% of our gains come from shorting this market using SQQ, SDS, TWM, and DXD. We look at our losses by ETF traded during 2023. You can see these highlighted in blue. There's where the big money was made on the inverse ETFs that I just mentioned. Next year, I should mention, we're going to be starting out. We've have traded different models over the years. The first model was at 200,000. We made that go from 200,000 to 443,000. Then we went back to 100,000 Model 2, and now it's up to 980, almost around $1 million. So that's kind of hard for beginners to grasp. So I'm going to start model number 3 next year and take our beginning capital back to 100,000 to make it easier for rookie traders. And if you're experienced or you have $1 million portfolio or $500,000 portfolio to trade, you can just multiply the trades by 5 or 10, whatever you want to do. Okay, now last but not least, well, don't forget, sign up and become a patron there. It only costs $20 a month, and then you can follow my YouTube channel by hitting this. Don't forget to like, share, and subscribe on YouTube. All right, let's look at the last thing I want to look at. Here is a 1-year heat map of the S&P 500. And you can see there's more red than green on this screen. Here's Tesla, was down 64.5%. Amazon was off 50.2%. NVIDIA here, that's one of the big semiconductors, is down 50.6%. Google's off nearly 40% there, and Meta's off 65%. Of course, Microsoft's off 29%, and Apple 20%. And the winner, the big green on the screen, is the oil and gas, the integrated oil and gas companies. There's Exxon with an 81% gain. ConocoPhillips with almost 69%, and Chevron with 53%. And don't forget about the drug manufacturers. They do their share. There's Lilly up 32% and Merck up almost 44%. Well, that's all for this year-end video. I'm Greg Gallagher, and I'm wishing you good trading, good luck, and a prosperous 2023.